Welcome back. Why invest in pre-construction condos? In this video segment, we're going to drill down to what the benefits are and the advantages of investing in pre-construction condos. Let's jump right in. So let's talk about pre-construction and why pre-construction condos, pre-construction in general. I think the big thing that I've seen in working with investors and my own portfolio is this idea of leverage, where you can leverage not only your capital, put down 5, 10, 20% on a property, and let the developer build it for the next few years. But at the same time, you're leveraging the time for the market to go up, to go down, and overall, we kind of know which way the trend goes over the long term. What would you say around this idea of leverage and your capital and time versus, perhaps other investments as well?
Sure, and we're probably not spending a lot of time on this, but as some of the people who've been around for a little while and invested a few times, and the reason they do it and why it's so popular is because it takes 2, 3, 4, 5 years to build a tower or build a low rise or whatnot. And so during that time, you put your money down. So you're just putting a deposit down, and then there's no mortgage payments. You don't have to worry about it. And what we want is to see that go up in value during those 2 to 5 years before you have to close. And then, so when you close, you have the option. I keep my options open. Do I want to flip it or do I want to hang on to it? What's happening in the market? And so I can cash out and take my money and put it into something else, or it's a long-term hold, and and now I'm renting. It's just a fantastic market for anybody that took the risk. Those first guys, back in 2019 that took the risk and bought into one of our first buildings there. It's really gonna turn out well for them because the rents have gone up so much and they bought it for a third of what they would be paying today. Is that a bad thing? Everybody's like, oh yeah, but I missed the market. No, you didn't. If you it's not going to stay the same. And every time the market gets shitty, and it's not shitty here, it's shitty in Toronto, and it's shitty in Vancouver right now, the market will recover and it will go back up. That's what happens. It's a long-term thing. Calgary and Edmonton over the next 5 to 10 years, you are going to see like an increase in price, and you're going to see an increase just for all the reasons that we gave you. So the risk is really low. You got no tenants, no mortgage. You put your money in, forget about it for a couple of years, and then you pick up and close on it, and you just do what the original plan was, long-term hold, or maybe you flip it.
Well said. I don't think, and you've already kind of covered the exit strategies right there, right? You can, have your low risk for those years. You evaluate the market when your project is nearing completion. Perhaps you flip it, like you said, you do an assignment. Perhaps you want to keep it long-term, close on it. Maybe in 2 years after you've had collecting some of these high rents, you see a good opportunity to cash out and move on, like you said. So there's lots of exit strategies here. Another one that, personally that I love to do is hold these properties for a long time. And, after 3, 4, 5 years, I like to do a little bit of a refinance where I can pull out my initial principal, get my cash back. Now I've got nothing in the property, still collecting rent, tenant pays down the mortgage, and I can go buy my next pre-con unit. So lots of exit strategies with pre-construction, and you can make your plan and always be ready to change it if there's a better option available.
100%. Can agree more.
What about this idea of positive cash flow? I mean, I'll speak to the Toronto market specifically, where new construction downtown is well over $1,400 to $1,600 a square foot, and your rents just will not come close with 20% down, covering your maintenance fees, your property taxes, given the amount of mortgage you're going to have. So cash flow in Toronto has been a distant memory for a long time. What's it like in Calgary? Can you get positive cash flow?
And for you newbies, like coming out of Ontario and Vancouver, you may not know what those letters altogether even mean. Like it's positive cash flow because you've only seen negative cash flow, right? And I'm joking, of course, but people didn't even believe us at first. We're like, no, you make a couple $100, maybe 300, some cases $500 more than what they're like, No, that doesn't happen. That's not real, because nobody remembers that, right? And it's still happening. You still get positive cash flow, maybe a little bit less than it was a couple of years ago due to the the interest rates and where they are. It's not forever. Nothing is ever forever. What happens when you purchase, when there's downward pressure on something, is you're purchasing at a time when the when you're not at the height of the market. So interest rates go up, you're the peak of your market knocked 5% off. And if, like, our market right now looks like it will continue to just go up for the next little while everybody else is going down, because as we talked about, we were on different trajectories. So we're still half the price of Toronto, maybe a little less than that. Will we catch up to Toronto? Probably not, but I think we might get within 20% of it, or maybe 15% of it. And same with Vancouver, because we're a city now of 1.5 million and growing, right? So positive cash flow is a thing. Even if you are breaking even if you're losing $100 or $200, you are still positive. Somebody's paying your mortgage down for you. And then when the interest rates come down a little bit, you just renegotiate your loan, and that interest rate comes down. Okay, so right now maybe you throw an extra couple of $100 down, but you were talking about refinancing. I refinanced one time 6 months after we bought it, took our initial loan out, and we had and then we had a brand new a free house, because we went up so much in that time that we took our initial deposit down.
Absolutely, right. And like you said, it depends. The market's going to go up, the interest rates will go up, they'll come back down. We can't predict that, but we can evaluate any investment based on where we're at now and see how it shakes out. So I did a bit of research on this. We'll save it for another time. But as you mentioned already, the price of in Calgary is about half on average of that of the GTA on new construction. But the rents currently, when they come to market in Toronto, are only about 25% more than Calgary. So you're paying double for only 25% more of the rent. You would expect at least close to double the rent, and that's really where you see this disparity.
Glad you said
on
that.
Potential.
It's absolute key. So, right on.
Yeah. All right, let's keep rocking here. So we're not accountants. We are not giving any accounting advice, but for anyone who hasn't invested in real estate before, it's much different than when you own your own home. Right, in terms of how you can do accounting, and definitely consult with your own accountant and professional. But you are running a little bit of a portfolio business, let's say, or a real estate portfolio business on these properties. So you can expense certain things, right? You can expense interest on your mortgage payments. You can expense, anything really, property taxes, maintenance fees in the condos, repairs and maintenance. You do have rent, and then you move it all together, and you essentially have a net income or net loss. And that's before mentioning the fact that you can also take depreciation on assets such as real estate. So we're not going to get into that now, but I mean, needless to say that there are advantages.
You got property out here. You got to come and check it out accidentally on purpose during Stampede, and you write your trip off because you're coming out here to check out your property, right? Like, I mean, it only makes sense.
Just make sure you call us and call Mark, and take him out for a nice dinner when you arrive there, and it's all good. By the way, meals and entertainment can be written off if they're for business purposes. So if you do have a meeting with your property manager, we're looking at new property. So just the list goes on in terms of investing in real estate and pre-construction. I think
then you'd probably end up in Banff checking some property out, so you write that one off too, right?
I don't see why you wouldn't go to Banff, Canmore, and just really get to know the area and see, and all jokes aside, really see what's going on down there. Look at some of the resale and the new construction in the markets, very important. But I think what we're all coming down to is like pre-construction in Calgary, in the Calgary area. It's a proven investment vehicle. Mark, you said earlier, folks that got in back in 2019 will do very, very well. But you're also saying that the upside potential over the next 5-10 years is equally strong. Do you see any potential, holes in what we've shared so far? What are the unknown risks? Anything you could?
No, you just have to go back and look at articles and stuff over the last couple of years for with COVID, and it's not just people moving from Toronto and coming to Calgary or coming from Vancouver. Look at the migration patterns. Like, people are leaving New York and they're going to Florida. California is going to Texas and they're going to Phoenix and they're going to Ohio and whatever else. This will be looked back at as the Great Migration. I said that really early COVID, and you can see it happening and still happening. I don't think that's ever going to stop. And so those big, where we go up really quick and then we crash, in our market, and then go back up again and then crash a little bit more. That's gone. I think you're going to see more of a steady, a steady flow up, more of a linear line, not linear, but like more of a smoother line going up.
Right.
Like, you've seen Vancouver and Toronto go through, and Ottawa more recently. I think those days are over. So the days of the big troughs. So,
well, we'll see. And I tend to agree with you. And the macro is certainly on track for that, with, as you mentioned, just immigration and the need to have more affordable cities and opportunities for people to live. All right. So we've now looked at why investing in pre-construction condos makes sense. We've seen some tremendous advantages and benefits of investing in pre-construction condos. So let's have a look in our next video, the type of projects that ourselves and our clients have actually invested in. And we're going to just look back at 2022 to give you the most recent and up-to-date collection of projects that we were a part of and that our clients took advantage of. You don't want to miss the next video. Stay tuned.